Thanks for that, Aisha. Well, I'm in conversation with Amisha Vora. We're all watching with rapt attention with that interview, and it was very interesting. Lots of key takeaways. So let's find out what the experts think. Amisha, I'm going to start off with the big headline, I think. Markets are in a direction that are upwards. That was what Rakesh Jhunjhunwala said. Is that a view that you concur with as of now?
So as a house also we believe that, minor corrections and a bit of volatility will definitely come. But the way we are structured at the moment with, interest rate or outlook on monsoon and the GST and the expected improvement in demand, and above all the way earnings are depressed because of all extraordinary reasons. One year it was, stock losses in metal sector. The other year all the banks providing for their past problems rather than the current earnings. So earnings are reflecting all the problems of the past. They're not reflecting the current potential or possibilities. So I think, yes, we are just begin, no doubt about it. But of course, he is a very long-term investor, and public should keep it in mind that there would be a lot of, ups and downs during this journey, and they should not get caught on the wrong footing with overtrading.
When it comes to valuations, he was fairly, categorical that we're nowhere near the top as of now. What's your call on the kind of valuations that we've seen?
I think one of the most important comments which I liked is to relook at the P's in the scenario that interest rates are low world over and they're not going to go away in a hurry or go up in a hurry. That's a very interesting and differentiated view, and I don't think a lot of people at the moment are either buying it or considering it. So you keep hearing that markets are very costly, and the only argument comes is, earnings growth is going to come. But the way to look also is that not only that earnings growth will come, but also that probably the PE range may just expand and continue to be there for a while longer. So I think that was a very interesting observation.
And when it came to the IT sector, the call is that there is bound to be a correction. What's your view on IT given the kind of results that we've seen so far?
No, definitely, there would be a quarter, 2 or maybe 3 quarters of a slowdown in earnings than what market expected. But if you see, within our top picks also, Infosys has continued to be one of our most favored stock, apart from the fact that within the sector, we think that as a management, they have very good vision to steer through this timings, which are going to be a change timing. As also we think that the size and the kind of free cash that they generate, it's just a matter of time that we have little more patience with this sector and they will give good return.
And when it comes to the auto space, he was talking about how the valuations of Tata Motors are about 9 times when the Nifty valuations are at about 23 times. Quite surprised by that. Any line that caught your eye, and what's your outlook when it comes to autos?
In auto particularly, we are more bullish on the domestic auto part of the business. Tata Motor reflects both the domestic, but which is a very meager part. But large part is UK, US and China, Russia. And I think the key factor when we compare valuation is that Tata Motors does not write off a good portion of their investments in new vehicles, etc., etc. So there is some comparative differences in terms of valuing stocks. But apart from that, we do agree that their lineup of products is really good, and on a very medium to long-term basis, it's a very good buy.
Thanks very much, Amisha. Those were some interesting key takeaways, and that's the view coming in from Prabhudas, Lilladher, Neeraj. With that, it's back to you.